With stock markets posting another strong start to the quarter, we began to reduce our overweight position to equities, feeling that the risk-return trade-off was not quite as attractive as it was earlier in the quarter. We still have a positive outlook on the global economy, feel that vaccinations are proceeding well, and the reopening is continuing as well. However, the focus of the market has now shifted to building inflationary pressures, and of course what central banks might do in terms of tightening policy to lean against those inflationary pressures. These concerns came into focus for the market, in particular in the second half of the quarter, and many equity markets had a tough time pushing higher. We're also slightly favoring cash over bonds in the fixed income portfolio. Again, with these inflationary concerns, we expect yields to rise, and of course, that's a detrimental effect on the price of bonds. We entered the quarter with a partial hedge on our US equity position, given an expectation of a continued rise in the Canadian dollar. Now, one of the key drivers for the Canadian dollar's rise recently has been the expectation that the Bank of Canada would be tightening policy at a quicker pace and begin to act sooner than the Federal Reserve south of the border. After a push higher in the currency over the course of April, we began to reduce that hedge, and now we're sitting at a neutral currency position. Ultimately, we believe there's a limit to how much the Bank of Canada will be able to act ahead of the Fed. So far this year, we have benefited from exposure to the pure value factor in US equities via an ETF in the completion fund. From a factor perspective, value has been the clear winner so far this year. This quarter, we began to take some profits on that position. We've also benefited from some opportunistic positions in the options space. In the middle of May, for example, when yields spiked higher, this led to a sell-off in the rate-sensitive US technology sector. As we did not expect that sector to remain out of favor for too long, we purchased a call option and benefited from a quick reversal in the NASDAQ as it soon regained its highs.